Hello there, hope you're all doing well. Today I'm going to be talking about a very specific form of trade management and how you can actually capitalize on trades that don't go to your full target. And what I mean by that is how to be able to take time-based partials. Now this is a question I received after my latest execution, which I took on Friday, the 15th of August. And people were asking me, how did I know that price would now not go to the target I initially outlined, and instead I would have to take a partial and monitor accordingly? So we're going to keep it very simple and go straight into the breakdown top down from the higher time frame, and then I'm going to show you on the lower time frame exactly what I was thinking. So on the higher time frame right here, you can see I marked out the all-time highs here on NQ. This was actually taken on ES, this high. Now, knowing the fact that ES took all-time highs means we have all-time high SMT. In addition to that, we have the daily SMT as well. And you can see from London, we actually got a beautiful sell with that SMT, because around this time is when that all-time high SMT formed. This is when ES took that high. Price retraced into the imbalance that we monitored right here, which you can see we rejected the day prior right here. So that's showing to us that this is an area of interest. And we know that for a fact, if price then decides to revisit that area at a later time, we can anticipate another reaction from that same area. And that's the same thing I teach with PD arrays that have been used by price prior, is the fact that we have to look, okay, what sort of reaction did price have at this area? Is it clearly a point of interest? And as you can see, it is. So this is showing to us that we're still bearish because price is rejecting here. So during London, we sell off, all right? You can see here, price towards the start of 7 o'clock, we move higher, we retrace. Then we have 8:30 news. 8:30 news consolidates around this candle, and finally towards open, we see that drop lower. Now, if you were not a part of this sell, okay, if you didn't catch the sell, and you see now around 9:30, price is somewhere here. You have to monitor, okay, where is price likely going to go? Now we have this imbalance right here, and you can see I've marked out specifically from this to this low right here. This is because this is the remaining part of the imbalance that still needs to be balanced out. Okay, so I'm just specifying exactly what sort of area I want price to reverse from, because otherwise you would have a large imbalance here, but you can see we've already filled that in here the day prior. Another reason being the fact that we have a previous daily low here. So we have a time cycle low forming before finally filling in that imbalance. So this to me was a very key point of interest, because I knew for a fact, yes, we are bearish, but we're going to have a daily SMT here and price is going to fill in the rest of this imbalance. So what do you expect? You can anticipate that we're going to have at least a retracement into the range. And since I did not take part in this sell, I was looking to take that retracement buy up into that range. So looking at the lower time frame right here, as you can see, this is that imbalance that I marked out. And essentially what I was waiting for here was for 10 o'clock to open. Why? Because we had news. So knowing we have high impact news at 10 o'clock and we're technically bearish on the higher time frame, I have to wait for news. If I was trading in line with order flow, looking for a sell, potentially I could have traded before news anticipating that it would distribute. But as I'm trading a retracement here, I'm looking for that manipulation. So what do you see happens exactly at 10 o'clock? Price opens, goes directly down towards this low, but it does not take the low. So the SMR, as you can see right here, is protected. Instead, it creates an SMT. So now we have another SMT because we have equal lows, but ES actually took this low, which means we have double SMT. So not only do we have daily SMT that I showed you on the hourly chart, but we also have a 90-minute SMT here. So I see that, and I'm literally monitoring exactly when this candle closes. Do you see how it did not close below our point of interest, and it also respected this? You have a busy right here. Price respected that busy, formed that beautiful wick. This to me was screaming that now we're going to see that retracement. So I literally enter right there. So as you can see, I entered almost right as this candle was about to close, because I saw that we were respecting this imbalance and we would now likely deliver higher. And you can see almost seconds later, price instantly goes higher. I know now that price is finished manipulating and we're going to see that delivery higher. So now that I'm in the trade, you can see right here, I've marked out these highs. We have relatively equal highs inside of this imbalance, okay? And this was the first imbalance that formed at 9:30. And you can see this was the first imbalance that took out key liquidity. We had time cycles prior here, which are these lines that were taken. And so I want to see price come back into here and take out these highs. I was literally just trading the retracement, still knowing we were bearish on the hourly, up into here, and then I would anticipate price to go lower. But how could I know for a fact that I would have to get out here? Because that is the question. So during the execution video, you will see that I actually decided to take a partial here. And this was the question I got. How could I actually take a time-based partial? Now, a time-based partial is a combination of multiple things. One thing, number one, being the fact that price should deliver within a certain amount of time from when you enter, okay? And how can you know how much time it can take? Well, the first thing is macro. I want you to look at exactly this candle, 10:15. I anticipated that this 10:15 candle was going to be the candle that took out those highs. Why? Because it's at the end of our macro. If price does not reach any target towards the end of that macro and starts showing me signs of rejection, it's very dangerous for that buying idea. So I'm seeing the fact that we now have this SMT. We have a 10-minute SMT at this high, which should have delivered to our target. At this moment, I'm already starting to be more cautious. So what am I looking for now? I'm looking to see what sort of reaction are we going to get from that SMT. Now you might have seen that I had marked out this high. Now this high was a time cycle high. And what I do is I monitor the reaction once we have displaced above or below a previous time cycle high. Now we have a 10-minute cycle high here. And you see that price closed above it, which was a good sign. I anticipated that this would be used as support, as you can see in the video. Now price did not reach the target, it did not retrace into that, so I'm very cautious and I'm monitoring, okay, how do we treat that previous cycle high? As you can see, at 10:17, price closes below that high. To me, this is the first warning sign, but I'm specifically giving price 2 minutes right here. Now, why 2 minutes? Because I want to see if it uses that level I'd marked out as resistance now or support. So I'm giving it 2 chances here. First chance at 10:18, price retraces into that level I marked out, rejects it, closes like this. This is not what I want to see. I clearly wanted price to just retake that level, use it as support to go higher, reach that target. And that would be an acceptable delayed target being reached. Seeing this rejection, I'm giving price one more chance, one final chance here to push above this level. I'm seeing the fact that price retraced into it and rejects again. It's showing me clearly it does not have the strength to keep on pushing above here. So what do? I take a partial right away. Take off a contract right here, manage my position, go into profit with my stop loss, and simply just watch what price wants to do. Because I know at this point it can be dangerous. Price is taking too long and it's not showing me what I want to see. You know that for a fact, if the first macro did not reach the target and we then start to consolidate, the next macro is what we have to wait for. If price cannot even break above this cycle high, and you see it start rejecting towards that next macro, you already know it's not a good sign, because we can get that next macro just continuing lower as we are bearish on the higher time frame. So basically what I'm trying to convey here is the fact that for our position management, we need context. We need to know on the hourly chart, are we bearish or are we bullish? And if we're trading against that order flow, okay, I'm going to be very specific with my requirements for when price should reach my target. So you can see here, I wanted price from 10 o'clock to deliver inside the macro. And that's also a general rule. If you enter inside the macro, preferably price should deliver towards the end of that macro, okay? If it does not deliver towards the end of that macro, and you start seeing a sell setup form against you, because now you have this SMT, price is rejecting, it's finding resistance at the level you had marked out, you have to be cautious. And this is something that will come with experience as well. As you become more advanced, you will start to recognize these signatures when price should have reached within a certain amount of time. It should have gone here, but instead decides to start rejecting. And another sign of this is the fact that we were consolidating here. You don't want to see this type of consolidation trending lower, okay? And how do we monitor that? Well, we monitor the original point that we had marked out, this time cycle high. I highly advise that you start looking into using these smaller time cycles, because obviously you can see right here I have my 90 marked out with this line, and here's a 30-minute cycle. But of course, we have 10-minute cycles inside those, and even 3-minute cycles as well. So what you can do is that you can monitor those highs and lows that formed at the time cycles, and you can see if price is going to keep on being bullish or bearish just by looking at that. To summarize, basically the higher time frame context was against the trading idea, so this was just a retracement, meaning you have to be more cautious with your targets for this trade. Second is the fact that price did not reach our target inside that time window. We wanted to see it reach towards the end of the macro, and it didn't. So thirdly, price then starts rejecting with an SMT, which is a potential sell setup. That's not what you want to see, and you have to manage accordingly. So you already know after this macro, this is going to be a time-based partial. So with that being said, I hope you found this video insightful and that you'll be able to think about these things for the next trade you take and to add even more context to your ideas moving forward. So I hope you enjoyed the video, and I'll speak to you next time.